Welcome, everyone. Thank you for attending this event. I'm very, very happy to see so many new faces here. So today we'll have a panel on decentralized exchanges. I'm Zahreddine Touag. I'm the head of trading at Woorton. This is a very, very exciting topic for us as a market maker. And we brought you key players of the industry. So Yaron from Kyber, Will from Ethfinex, Jill, who has an extensive background on decentralized exchanges, and Angela from Jinse Finance. I hope you'll enjoy the show, and thank you very much for attending this event once again.
First, I wanted to say thank you for still staying with us. And Angela, the moderator of this panel. Jinse Finance is a blockchain media. I just want to say that. Yeah, thank you. So decentralized is the most important part in the blockchain industry, and also fintech is a very hot topic these days. So today's topic about this panel is DEX, a step toward decentralized finance. So my first question, maybe I should like you to introduce for very little bit, yeah, from.
So I already introduced myself, so I'll do it more quickly. I'm Zahreddine Touag. I'm the head of trading at Woorton, and we make markets on exchanges, and we have a specific interest on decentralized exchanges that we will talk about in the panel.
So my name is Jill. I'm a consultant, and I've worked with a lot of startups in the space, including some in the DEX and DeFi ecosystem, but you can also think of me as a user of these products up here today.
Yeah, so my name is Will. We run at Ethfinex 2 exchanges, so a centralized and a decentralized interface for non-custodial trading. And we interact with a lot of other projects in the space for various different DEXs.
Yeah, hi, I'm Yaron. I'm the CTO of Kyber Network. Kyber is a swap/decentralized exchange protocol over Ethereum and EOS. And in Kyber, in addition to being only an exchange, we also do market making actively, both on Ethereum and EOS.
Thank you so much. So my first question is, many people are talking about DeFi recently. So what are DeFi applications, and what is the difference between DeFi and the fintech? Maybe from Will? Thank you.
Yeah, so I think there's, the idea of DeFi is really becoming one of the big hot topics over the last year, but I think the real big differentiation between other fintech projects, which is the fact that it's all about openness, so open access, open source, open information, and that's the really sort of powerful thing about a lot of the applications being built on DeFi is that, for example, you have projects like MakerDAO who can mean that you can take a loan essentially by posting collateral without having to ask permission from anyone, and that all of that system is open source, so it can be built and extended on top of it by anyone. So the kind of DeFi movement is really particularly strongly about open source, and the fact that each of these applications on their own is interesting, but on top of them you can build, you have the building blocks basically to replace the whole financial system that we currently have.
So Jill? Yeah.
Yeah, I would also just add to that. I think that's spot on, perhaps boringly. I agree. But what I would add is that a lot of what we saw in the crypto ecosystem, basically from the advent of Bitcoin up through sort of 2015, 2016, 2017 even, was the advent of new assets. But the way that those assets were largely custodied and traded and transacted and moved actually looked a lot like Wall Street and like the old systems that we had. And what to me is very exciting about DeFi is for the first time, we're starting to unlock ways in which this infrastructure can enable new ways of trading and transacting and interacting with counterparties, with risk, and with those assets themselves that Wall Street hadn't invented yet.
Thank you. And about the open source, what's your perspective from?
Okay. So I think in addition to open source, I think that DeFi protocols or DApps in general are much more open in the sense that, for example, Facebook might as well be an open source, but it sort of so it doesn't own the code, but own the users. Where the special thing about decentralized applications that in a sense they don't own the user, so user can go out immediately from Ethfinex. In Kyber, user does not have onboarding at all, which actually makes our life easier, but user lives much easier. Make it easier to build another stack of applications on top of it that interact both with, for example, Ethfinex and Kyber and other decentralized exchange. So I think the open source, open source is not that new, but the concept of openness, of being an open garden, not owning your own user, that's the novelty.
And I'd probably add that openness means that, as you were saying, all the relationships between the players in the ecosystem therefore change as well, and that's what then means that, unlike in Wall Street or the traditional exchange system where you'd have a series of prime brokers, clearing houses, other sort of many layers of intermediaries, that whole system also can potentially be changed by this.
To add something with a market maker perspective, we were very interested on decentralized exchanges, and for a reason. So historically, as a market maker, we are centralized, obviously, and we are not open source. You cannot use, for example, our algos. They're not public or anything. But we trade mainly millions and millions on this market globally on centralized exchanges of an asset that holds its value because of its decentralized protocol. So basically, we trade Bitcoin on centralized exchanges. It's fully decentralized, but it's still traded on centralized exchanges, and that's the same for many cryptocurrencies. And to look at decentralized exchanges as a future in liquidity is something that is very interesting for us, because we think that those centralized exchanges appeared and existed only because of the technology level of technology that this technology was at and is still at in terms of scalability. So because it's not scalable yet at a high level, so we're trading it on centralized exchanges, and we think that it will shift at some point on decentralized exchanges, and that's why we'll take a look at it very closely, and believe that maybe in 2, 3, 5, or 10 years, I don't know, it's very experimental, we will have much more liquidity in this space.
Thank you so much. So there are different forms of DeFi application, for example, payments, lending, stable coins, tokenization, and decentralized exchanges. Why do decentralized exchanges matter in DeFi? Maybe from Jill, I know you from the consulting part.
Yeah, so I think that, as you mentioned, there's all sorts of innovation going on in the DeFi space. There's decentralized lending, there's decentralized derivatives, synthetic derivatives. There are all kinds of angles that people are bringing to this. But underlying all of these is the premise that we can have a way of trading and exchanging value peer-to-peer, and of finding a counterparty in a peer-to-peer manner as well. So being able to buy and sell without having to trust an intermediary, whether that's an intermediary to custody your funds, or in some other cases, an intermediary to even match that order between the buyer and the seller. And depending on what you want to solve for, these things may be more or less interesting, or perhaps a centralized exchange will serve you just fine. But I think as we talk about these other use cases, it's important to remember that underlying all of this, we need to have infrastructure that enables what we've come to call decentralized exchange. And so to me, that remains probably the most interesting area, even though I think in the future, based on these sort of decentralized exchange primitives, we'll have a lot more of these applications built out in a way that starts to resemble those Wall Street functions.
Thank you. And maybe
Yeah, so I think the one key role that DEX will take place once the ecosystem is big enough, etc., is price discovery and the price oracle problem. So all these derivatives projects, margin lending, or just P2P even agreements, they all need some real world or semi-real world reference on the price of things. Like okay, US versus euro, US dollar versus euro, but tokenized US maybe dollar versus euro in the future, real estate, etc. So I think this is one major role, and yeah, second role as mentioned before. So yeah, if you need to liquidate or trade with your peers, so yeah.
I think along those lines, another role that I see DEXs potentially playing in the future is, as I'm sure everyone in this room and everyone watching is well aware, over the last couple of years, we've had this sort of Cambrian explosion of tokens. And the reality is that some of those tokens may be utility tokens. So for instance, in the case of Filecoin, you need to have a Filecoin in order to participate in their decentralized storage system. Well, that's all well and good, but unless I'm one of the sort of weirdos in this room who actually cares about cryptocurrency, if I want to use that application, I probably don't want to deal with buying Filecoins on some other network and through some exchange. And so I think that there's the potential for DEXs to also abstract away some of these processes and to have applications built on top of them that allow me to access things like the Filecoin file storage network without having to interface directly with the coin. So these are just some of the high-level ideas of where DEXs could take us in the future, but we're still a little ways away from that anyway.
Will, how do you see that?
I essentially agree in that I think...
So boring.
Yeah, very boring. I think DEXs and, well, exchange should basically become infrastructure. And I think that's happening already, but it will take some time before they're mature enough that they are kind of in the background. Right now, it's exciting. It's great to work on decentralized exchange, and I think there's a lot of projects doing it. And there's clearly money to be made there. It's the main use of cryptocurrencies and tokens at the moment is to some extent speculation and trading. But over time, if the kind of the DeFi, decentralized finance movement is successful, actually that won't be what the end customers interacting with. They'll be using lending protocols which need price discovery from exchanges. They'll be using all sorts of other applications like Filecoin where you're interacting with the system, and you will need to make trades and get liquidity from somewhere and have prices in your system. But the DEXs will have become the infrastructure layer rather than the kind of end customer experience. And we're still a long way away from that. Most of what's happening now is experimentation, trying all sorts of different protocols and ways of encouraging liquidity, which has to be different sort of when you're on the blockchain compared to on a centralized exchange. But I think a lot of that will come out over the next few years.
So talking about that, I think there are many types of DEX, if I'm right. So what is the difference between them? How could we choose our which DEX is suit for myself? Yeah, maybe.
Yeah, I'll start with that, and then would love to hear from everyone else, of course, as well. But for me as a user, when I look at evaluating the different types of DEX out there, all I really care about is liquidity, which one is going to give me the best price. And it's all well and good to sort of wax poetic about the theory behind them and read through the white papers and get into the weeds of the different implementations and the different protocols. Like, don't get me wrong, I think all of that's really cool. But again, as a user, and all of these products should ultimately be about the end user, all I care about is liquidity. And so I think that the biggest differentiating factors between the different DEXs out there is liquidity. And we're starting to see a lot of different ways emerge of trying to bootstrap liquidity, but it's a really difficult problem. So to outline just a few of those, we have the sort of Uniswap model of bootstrapping liquidity, which is basically holds a constant product of the inputs. So if you are trying to trade ETH for BAT, the Brave token, then it'll hold a constant product of how much ETH is in the pool, how much BAT you can get out of it for that ETH, and so on. So that's one form of trying to incentivize and bake in liquidity to the system. 0x recently put out an implementation of the protocol, an idea around it that's yet to be voted on, that would also incentivize liquidity in a way that's not totally dissimilar to what I just described around Uniswap, but leveraging their own token. And then, of course, you have the more kind of old school ways of what Ethfinex does, of porting over liquidity from centralized exchanges, and also of actual market makers and liquidity providers. But that, to me, is the biggest question around all of this, of we can talk about, the future of DEX and what it can do for us, but without liquidity, we're nowhere.
So I might want to disagree slightly, actually, in this case. So liquidity is clearly one of the big issues, and if there's no liquidity, then you're stumped. But really, I think it comes down even more to cost, essentially, and liquidity is one factor in that, but there are other factors in your costs. So if there's no liquidity, you're going to pay more to make those trades, especially if it's at a high volume. But one of the things that we've seen on Ethfinex is that we do take basically all the liquidity that you have on the centralized exchange, and actually we port liquidity both from Ethfinex and from Bitfinex and put them and make them available to anyone trading from their own wallet. And yet we don't see, we see much higher volumes on the centralized side, and people choose not to use it trading from their own wallet, despite having the same liquidity. And that's partly because there are additional costs. So there's costs of moving your funds on the blockchain, of actually managing your own custody. So that's the kind of hidden cost, in that, yes, you can take custody of your own funds, but you have to be willing to take the responsibility that if you lose them, they're gone forever, or set up, serious infrastructure, which particularly if you're an institution where you need to have it insured and protected, is going to be a significant amount of work. And all of these barriers, including the fact of actually settling it on-chain, at the moment mean that, although even with the exact same liquidity, the costs mean that it's very difficult for decentralized exchanges to compare with a centralized exchange. Now, we see that all of those will reduce. So, for example, most of the implementations like Kyber, ourselves, and 0x, and several other decentralized exchanges are still layer 1. So every transaction essentially gets settled on-chain, and you pay for that. Usually that also means that if you're trading on them, you're trading from a hardware wallet or your own wallet with custody yourself. But the next generation of DEXs and the kind of things that are being worked on now solve many of those issues. So they don't settle every single trade directly on-chain. They work on side chains or state channels. They allow you to choose a managed custody provider who's not necessarily yourself, and still be able to trade inside these systems. And as these come in, they reduce the costs involved in trading, and will make these then eventually cheaper than trading on a centralized exchange, because you also cut out several layers of intermediaries, especially when you start to compare not just against cryptocurrency exchanges, but against exchanges in foreign exchange or securities for certain types of assets, where you have whole layers of brokers in the middle who currently also charge fees for getting you best execution. But again, all of these things can start to happen at protocol layer, but we're a long way from that.
So
What does Kyber network do?
yeah, so I think one, very interesting and major difference, though I know one can argue it's only UX difference, is between full order book exchange to swap services. And one interesting observation is that as of now, so if you took Kyber, Bancor, and Uniswap, which are all swap services and not order book services, I think that they account for at least half of the DEX ecosystem in terms of volume and users, etc. Which maybe okay. So one thing that people can argue is better UX or simpler UX for the end user. But another reason is likely that it's better UX for developers of, trading bots or arbitrage bots. And then it takes you to the question, and who are your end users? Because even in the real world, right, at the end of the day, most of the real users or the volume is not accounted by human users. Or and for now, yeah, so it looks like these swap services are much easier for advanced trader in the sense of, on-chain arbitrage bots and application.
To kind of react on this, so we've been brought to the decentralized exchanges world by some of our clients. That's how we ended up and how I ended up here. And the idea was to kind of follow them in this world, to be able for them to provide prices for those apps and those implementation that they have internally on chain. And the approach we took is kind of in the same way that what Will said, by kind of replicating all the books from centralized exchanges to decentralized exchanges. And that requires to have a trading infrastructure that is agnostic to decentralized or centralized exchanges. And on a centralized exchange, it's very easy to plug for a market maker. You just plug to the API, you go and you start running your algorithms. But on the decentralized world, there are some things that are much more difficult. You need to interact with some smart contracts, which is for a market maker like us quite new. You also need to have kind of the whole funding. You cannot rely on credit lines from an exchange or things like that to allow you to trade more than what you have. And the idea here is that, I mean, the approach we take to kind of bring liquidity on chain, and one more time to kind of support our clients, but also to kind of do this bet that in the future it might be in the on chain that the liquidity will be, is to plug everywhere and have an inventory which is capital intensive everywhere, so that we can basically take an order from a decentralized exchange, and as, for example, if the market on the decentralized exchange is not deep enough or there is not the opposite interest for us to offset our position, we could offset it elsewhere on a centralized exchange. That's the kind of approach we're taking by being this bridge for now, and I hope maybe in the future it will switch, but we hope to be there when it will switch.
Yeah. And I think centralized exchange are also launching DEX, right? And for example, Binance, they have already put its DEX on their testnet in February, and its mainnet launch will happen maybe in this month or next month. And between the centralized exchanges and DEX, which will dominate in the future of trading, maybe from, yeah.
So one more time, we look at that very closely. So we looked at the Binance testnet. So you need one BNB to start playing with it, and we also look obviously at Kyber and Ethfinex. We're working closely to kind of launch on Kyber first, and then other decentralized exchanges. Today, on a market making perspective, what we look at is the latency we can have, basically, because this is very important for our algorithms to run. And the fastest, the better latency we have, the more precise we get on the spread, on the price you can see, and on the liquidity we can bring. And if we have a very large latency, it's like a few seconds or minutes. It's for us kind of painful, because we don't know how the market will move, and if it moves, the time that we update or cancel our orders, we take a risk, and to kind of manage that risk, the only thing we can do is enlarge the spread, which is not very good for liquidity. So the latency is something very important for us. The costs, obviously. So when you are on exchange, a centralized exchange, you send orders algorithmically, electronically to the exchange. It's free. Basically, you use the API of the centralized exchange. It's free. You send a request. Could be an API on REST, WebSocket, whatever. But on a decentralized exchange, once you send orders or you cancel orders, it's on chain. So you pay gas. So you need to implement these costs additionally in your algos. And I think really from a market making perspective, the more latency we have, the less cost we have, the better it is. But obviously there's a huge trade-off. And today, when you go on that line of latency and low cost, you end up moving closely to more centralized way or semi-decentralized way, which is difficult to kind of manage. And that's why we look at it very closely to see what kind of new approach and new technologies or new ways of new algorithms of consensus that could kind of allows us to reach this scalability without kind of crossing, removing this decentralized aspect of it.
Do you want to add some more opinion?
Yeah, sure. I think that it's important with any of this technology to define what we mean when we say something like decentralized exchange, and also to define what the benefit is to the end user. And we can also debate, of course, about who your end user is. You know, is it the trading bot? Is it the market makers? Is it retail? Is it institutional? But in the case of decentralized exchange, how I think of it anyway, again, very open to debate, is the main benefit that you're deriving from using that as opposed to a centralized exchange is you're not trusting a central third party with your assets. It's non-custodial. So in the event of something like Mt. Gox happening, you're not going to get goxed. Now, for some investors, for some traders, that's very important, especially if you're sort of trading at high volume. That might be very worth the extra cost of using a decentralized exchange in order to mitigate that risk and that exposure. But for other traders, that's not the case. You just want a centralized exchange. And so when we talk about, you know, which one of these is the future or which one of these is going to eat the world, it really depends on who the user base is and who you're talking about. And that's not even to mention all of the gray area that exists in the middle here, where you have centralized exchanges launching DEXs, where you have protocols like Arwin, which just launched their beta today on KuCoin, where you can still use a centralized exchange, but their protocol enables a non-custodial way of accessing that. So it depends, I guess, is the upshot.
Similarly, I mean, so the background here as well is that Ethfinex was spun out of Bitfinex, one of the oldest cryptocurrency exchanges. So why would they choose to invest into a technology like decentralized exchange space? And I think there are many reasons beyond just the kind of obvious one. And it's not it's not that decentralized exchange is necessarily going to eat everything and become, you know, the only way to trade. But there are clear benefits, and you know, for example, if as a market maker, you're holding funds on centralized exchanges when they have custody, you have to spread out your collateral essentially across multiple different venues. You can't necessarily then easily withdraw and move them between, or at least there's a time delay. Whereas if you're connecting to several open exchanges, you can, in theory, much faster and with a lower collateral size, which reduces again your cost, be getting best execution across many different exchanges. And those are the kinds of things which will, when we reach that point, really drive adoption of DEXs. But that's not to say that there's not always going to be a demand for lower latency execution, which is always going to be faster on a centralized exchange, even at the kind of ultimate limit of where they can get. And I really do think that, you know, when it comes down to it, what's happening now and the competition between sort of DEXs and centralized exchanges purely in the cryptocurrency space, it's going to be, it's not as easy as saying one is better than the other. It's definitely more about, in concept, what's developing, essentially changing the relationships between different players, and meaning they get all the advantages of both.
Yeah, I think looking forward, you know, like 5-10 years forward, so security might not be the issue once, you know, big players come into the field. You know, trading on Nasdaq is probably secure. My bank is relatively secure. But DEXs, you know, moving forward, might have opportunity to solve some issues, maybe have some regulation arbitrage in a sense, solving some compliance or mitigating compliance issues, which is probably the next question, and maybe, you know, introduce some fairness like front running, prevention, which is, as of now, you know, very far away from being a solved problem. But these are issues that, you know, are also in the centralized world. I think, you know, given if there will be a very big improvement in the infrastructure of blockchain with latency, etc., then yeah, I think eventually DEXs have a potential, you know, to take over the centralized world.
Yeah, thank you. So in closing, could you mind telling us which DeFi project got your most attention recently and why? Maybe from Zahreddine.
Yeah. So just a quick disclaimer, I'm sitting at the at the Melon Technical Council. So it's the council that kind of run and governs the Melon protocol that has been developed by Melonpod. So I've been kind of digging into this protocol. So this is the protocol that kind of have my attention currently in the past. So it's an asset management protocol. So you can basically run and set up a fund and run it on chain, and also put, for example, your rules, your concentration rules, your trading universe, and then it's enforced directly on the blockchain. And that's how also we ended up kind of exploring these decentralized exchanges, because Melon protocol takes the prices from decentralized exchanges. So the more accurate the price is, the more accurate the net asset value of all the funds are, and this is the project that we are following closely at Woorton.
I would probably say 0x, the 0x improvement proposal, number 31 that just came out, that is intending to encourage liquidity on the platform. I mentioned this earlier, that uses the 0x token, I think is great. I think in general, as we start to see more and more competition within the DeFi space, we're going to see continuous sort of proposals for improvement across projects like this, which is really exciting. So that's what I've got my eye on.
Thank you. Will?
So I'll take a slightly different tact in that some of the ones I'm most excited about are related to governance, and I think they tie in very closely with DeFi, and particularly with decentralized exchanges, in that as a lot of this technology becomes more of an infrastructure layer that a lot of projects are relying on, we will need ways of governing and upgrading and running those. So one of the best ones that I know of is DXDAO, which is built on DutchX. So sorry, DXDAO, which basically will run DutchX, which is a project initially launched by Gnosis, with the idea being that it will be an open, decentralized autonomous organization with some initial reputation holders. But the idea being that it can grow to manage other DeFi projects, and particularly, for example, issues around which tokens can legally be traded, should there be whitelists and blacklists, and all of these things, which I think will grow out on top of many of these projects. And there are a whole bunch of other impressive projects who are working on governance related to DeFi, particularly, for example, like the 0x improvement proposal that was put forward. Currently, it's quite a basic mechanism of token voting to decide on that, but that there are many more sophisticated models. And this really also mimics what happens in traditional world. So many stock exchanges are currently essentially members' houses, where you have sets of members who are owning and part of that exchange, and they make governance decisions. And I think we can move to almost emulate lots of that, but improve and grow on top of it by making it open, by making the ability for anyone to join and improve these systems and contribute their ideas. And that's going to be a really important part of this infrastructure maturing.
So I think the most notable project is MakerDAO by far, and has very big effect also on the DEX world, as it accounts to very big part of the activity now in all the DEXs in Ethereum. Another notable project is Uniswap, which, I don't know, to me it's quite a surprise that it's really working in a sense. Actually, both DAI and Uniswap are kind of surprising that, you know, despite some maybe theoretical arguments, etc., at the end of the day, they really work, or at least for now.
Okay, thank you so much. Thank you for joining this panel. That's all of us. Thank you.